Hello and welcome to Forex Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be talking about fundamental analysis for novices, Japanese bank lending rate. You have probably heard the old adage, failing to plan is planning to fail. While failing to take note of an economic calendar on a regular daily basis in order to plan your trading around potential volatile economic data releases is planning to fail at trading. You should refer to one the day before you plan to trade, and eventually when you are proficient enough, you will look for opportunities where extra volatility might creep into a market after a particular data release in order to hop onto a post-developing trend. But before you are proficient, you should avoid such volatile times at all costs. The critical components of any economic calendar, which are available through most brokers, is the day, the date, the event type, the time of the event, noting that the time of the event might occur at your local time and not the time of the particular country where the information is being released. Also included is the likely impact the data will have on the financial markets upon its release. The actual data will be released into a set area of the calendar, and it's also important that you find out where. The consensus and forecast of the data which has been put together by the economists and analysis is also important, and where large deviances from this data upon release may cause volatility. We also need to note the previous level of the data for comparison purposes. Remember, we are looking to see whether the data is worse, better, or the same as the previous release. Better economic data numbers are positive for that economy, and where you might see the local currency strengthen, worse numbers might mean that the country is not doing so well economically, and where you might see the local currency weaken against its counterparts. As mentioned, we are looking for the bank lending rate for Japan year-on-year of June, which will be released on Wednesday, July the 8th at 12:50 AM BST. This particular data is considered as low impact upon its release by the Bank of Japan. It is the value of outstanding loans with Japanese banks, and it is seen as important within the financial markets because it provides an insight as to whether banks are lending more to businesses. The more money that is lent, the better it is for companies who might be expanding or buying more raw materials, and perhaps taking on extra staff. The actual data release is calculated as a percentage, and where the year-on-year figure for the 4th of May was 4.8%, and that the general consensus of the forecast was an increase to 7.2%. And this is what the market will be looking for a better number than for May, and thus an improvement of the year-on-year. Although the data is perceived as being low impact, this will show whether or not the Japanese economy is faring better from the fallout of the pandemic. Holistically, this and the rest of the data which is coming out of Japan currently will give an overall picture of the general health of the Japanese economy. A strengthening economy might mean a strengthening of a currency and vice versa, the only caveat being that quite often the Japanese yen is considered to be a safe haven for the currency and can be bought heavily even when the Japanese economy is not faring well. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.